Good morning, everybody. It's Jeannie, a senior 401k advisor and certified financial planner with Argy, and today we're going to go a little bit deeper actually into the individual investing strategy. Now, many of you are probably in a target date fund inside your 401k, and that's perfectly fine. That means that there's somebody there probably help managing the risk for you. But for anybody else who set up a custom investment strategy, whether it be in your 401k or an outside account, this is the video for you. Setting up a custom portfolio is great, especially if you've done it with the help of a CFP pro or an investment specialist. But what most people fail to do is actually maintain that investment strategy moving forward. Now, the very powerful tool that our industry uses to maintain an investment strategy is called rebalancing. And we're going to talk about what that is, how it works, and how you use it. So, to understand rebalancing, you really have to get a grasp on asset allocation. Asset allocation is how we manage risk inside portfolios. Now, there's three underlying asset classes, fancy word for categories, that we look at if we're looking at a really basic asset allocation. Those are going to be stocks or equities, bonds and fixed income, and cash. Now, those three asset classes are all going to have pretty different risk and return metrics. So the proportion of each of those underlying asset classes that we put in a model is actually pretty important. If we want to increase the risk of your portfolio, we'll hold some more equities. If we want to decrease the risk, we'll hold more fixed income, because fixed income and bonds should generally be less risky than stocks. So that is asset allocation. Now, the key is to put in the appropriate asset allocation for your risk tolerance. The younger you are, you may be able to take more risk. The older you are, maybe you want to take less risk. But once you determine that, you then have to maintain it. Rebalancing is the tool that we use for maintaining that original asset allocation. Rebalancing is the act of going back and saying, if I originally wanted to be in a portfolio of 70% stocks and 30% bonds, then occasionally or at regular intervals, I'm going to go back and rebalance back to that asset allocation. Now, your asset allocation changes over time because the underlying investments will either grow or decrease in value, and that's what changes your percentage. So, rebalancing is important for two main reasons. First off, it keeps you in the appropriate risk tolerance, okay? So if you had originally decided that you wanted to be invested in a 50% stock, 50% bond portfolio back in 2009, and you never rebalanced, by 2017, that would have been a 70-30, okay? 70% stocks, 30% bonds. So it would have been a fairly more aggressive portfolio than what you originally wanted your account to be. So rebalancing is automatically going to take you back into that risk tolerance that you wanted to originally be in. The second reason rebalancing is so important, follow me on this. The primary role of investing is to buy low and sell high, right? That's how we make return. We buy something lower and then we sell it for a higher value. Now, in reality, that's really hard to do. Even me as an investor, I don't want to sell my winners and buy my losers. Mentally, that's a tough challenge to overcome. But if you set up rebalancing, then you can help pull some of the emotion out of that. Rebalancing by nature is the act of selling those asset classes that have performed well and buying more of those that haven't performed well. So it helps kind of get you into the systematic process of rebalancing back, selling the outperformers, buying the underperformers. So rebalancing is a huge tool that we use. Now, the really cool thing is that most 401k platforms allow you to set up an automatic rebalance, so you don't even have to think about it. Once you select the option in your online login, then it will just do it for you regularly. Now, you'll see different options. You can rebalance annually, quarterly, semi-annually, and I think advisors will feel differently. I know for us, for the most part, we feel like an annual rebalance is enough. Maybe if you have a volatile market, you might want to do it a little bit more frequently. I think the key is that you don't just let your 401k or your investment accounts go for years and years and years and years without a rebalance, okay? You have to maintain them. So that is my video for today. I really hope that you look into your accounts, look into the rebalancing. If you have the option, select it. If you're in a custom portfolio, once you verify that your portfolio is where you want it to be. If you're working with an advisor on outside accounts, ask them, what is your strategy for rebalancing? What asset allocation am I in? These are the types of things. You don't have to know everything, but you just need to know enough to know that you agree with the strategy. So that's it. I hope you took something really great from this video, and we will be back again next week with more. Thank you guys. Have a wonderful week.